Assalamualaikum and hello to our lecturer and everyone. We are from SMLAW4B Group 10. Today, our group will present our assignment entitled Savings Plan Takaful in Malaysia, a Legal and Shariah Analysis. Assalamualaikum and hi, I'm Amira. Today I will present the introduction part of our assignment entitled Savings Plan Takaful in Malaysia under the subject Islamic Law of Insurance. In this introduction, I will explain the meaning of Takaful, the differences between Takaful and conventional insurance, the concept of Savings Plan Takaful, and the legal framework governing Takaful in Malaysia. So, what is Takaful? Takaful is an Islamic insurance system based on the concept of mutual aid, cooperation and shared responsibility among participants. The word Takaful originates from the Arabic word kafala, which means guaranteeing each other. Unlike conventional insurance, Takaful operates according to Shariah principles, where participants contribute money into a common fund to help members facing losses or financial difficulties. Takaful emphasizes the principles of ta'awun, which means solidarity or cooperation, and tabaru, which refers to donation. In addition, Takaful avoids prohibited elements in Islam such as riba or interest, gharar, which means uncertainty, and maisir, which refers to gambling. Next, Savings Plan Takaful and Legal Framework. One of the products offered in the Takaful industry is Savings Plan Takaful. Savings Plan Takaful combines savings, investment, and financial protection in one plan. Participants contribute regularly where part of the contribution is used for protection purpose, while another portion is saved or invested for future financial needs. This plan is important in Malaysia because of the rising cost of living and increasing awareness about financial planning and financial security. In Malaysia, the Takaful industry is regulated under the Islamic Financial Services Act 2013 or IFSA 2013. The industry is supervised by Bank Negara Malaysia, while the Shariah Advisory Council ensures that Takaful operations comply with Shariah principles. That's all for my introduction part. Thank you.
The Islamic Financial Services Act 2013 is the main legislation governing Islamic finance and Takaful in Malaysia. It replaced the Islamic Banking Act 1983 and the Takaful Act 1984 to create an untied legal framework for Islamic financial institutions. So under Section 2, Takaful is defined as a system based on mutual assistance, ta'awun, and also donation, tabaruk, where participants contribute to a common fund to provide financial aid upon agreed events under Section 8 further provides that only licensed Takaful operators are allowed to offer Takaful products. Savings plan is classified as family Takaful under Section 16, which separates family Takaful business from general Takaful business. So, under Section 28 of IFSA 2013, all Takaful operations, activities, and business affairs must comply with Sharia principles at all times. Section 30 also requires every Takaful operator to establish a Sharia committee to monitor and ensure compliance. In addition, Bank Negara Malaysia regulates the Takaful industry through guidelines such as the Takaful Operational Framework. The Takaful Operational Framework outlines how Takaful funds should be managed and confirms that Takaful operators act only as managers of administrations of participants' funds, saving funds and savings plan Takaful. This commonly applies the Wakalah model for administration and the Mudarabah model for investment and profit sharing. Any surplus distribution must follow the policies approved by the Sharia committee. As for savings plan Takaful, is based on principles of tabaruk and ta'awun. Under tabaruk, participants donate part of their contributions into a risk fund used to help participants who suffer losses such as death or disability. The concept of ta'awun reflects mutual cooperation and financial assistance among participants. Takaful also differs from conventional insurance because it avoids prohibited elements in Islam, namely riba and also gharar and also maisir. So riba is basically interest, gharar is excessive uncertainty, and maisir is gambling. So therefore, Takaful funds can only be invested in Sharia compliant assets such as sukuk and approved Islamic equities. Thank you so much.
My name is Tengku Ali Mutato and my matrix number is 084026. So today I'm gonna talk about our selected Takaful operator, which is the Atifa Takaful plan by Etika Takaful Berhad. So what is it? It is a Takaful plan. That is, first, it is super cheap. It is affordable. You can start with a contribution as low as RM100 a month, and that is like a price of a nice dinner, but it is going toward your future security. Now, what do you get in return? Protection. The plan covers death and total permanent disability, so known as TPD, so that your loved one are financially supported if something unexpected happens. But it is not just about protection. There is also a saving element. At the end of the policy term, participants may receive their accumulated saving plus investment return, and all of this is invested in a Shariah compliant fund. That means no riba, no rollout, and no maisir. They are all completely halal. On top of that, you can customize it. There are optional riders like critical illness and medical coverage if you want extra protection. And here is the flexible part. You can choose your contribution terms. You can make partial withdrawal or even regular cash payout along the way. So in short, the Atifa Takaful plan is an affordable, protective, Shariah compliant and a flexible plan. There is a smart way to combine savings with security.
Assalamualaikum and hello everyone. My name is Shariah and I'm going to talk about products offered by Prudential BSN Family Takaful. So, the first product offered by Prudential BSN is Anugerah Max. This wakalah based, which is investment linked family takaful certificate. From a Shariah perspective, it satisfies 3 core contracts. First, it is tabaru, which is mutual donation. Second is wakalah agency, in which BSN acts as a paid agent, charging an upfront wakalah fee to manage the fund. This fee is fully disclosed, which avoids any hidden charges which would violate Shariah transparency requirements. And lastly, which is a mudarabah, in which any investment profit from the unit accounts are shared between participants and the operator according to a pre-agreed ratio. So most importantly, this plan includes mental health coverage such as for stress-related illnesses, which advances to Makasih Al-Shariah. Objective of Makasih Al-Shariah, which is to preserve intellect, Hifzu Al-Aki. And one of the sub-product under Anugerah Max is Edu Achieve Bonus, which is structured as a gift, hibah from the operator, not as a guaranteed interest riba, which keeps it fully halal. However, participants must understand that the front-loaded wakalah charge, Shariah requires a full disclosure of this, which the Prudential BSN has provided. However, for those with high lapse probability, early termination risk, wasting contributed funds, it is something that is discouraged in Islamic finance as it undermines mutual assistance. Okay, so the next product I'm going to talk about is the Asas 360. This plan also uses wakalah and tabaru as its foundation, but it adds several unique Shariah compliant features. The first one is Kasih Bonus. Kasih Bonus is a periodic cash reward of 1% of the sum covered every 10 years. This is structured as hibah, not interest, and comes from surplus distributions after actuarial review, and it is fully compliant with Islamic contract law. The second one is a juvenile lien provision, which scaled benefits of 20% to 80% for ages 1 to 4, and it protects the collective pool. Why? Because the infant mortality rates are statistically volatile. This graduated payout is a form of risk mitigation that was permitted under Shariah to prevent unfair burden on other participants. The third one, which is prenatal coverage for 13 weeks of age. This is rare because Shariah scholars permit it because the tabaruk contract is based on future mutual assistance, not on the insured status of a non-existent person. The mother's contribution covers potential neonatal events, which is considered a valid form of takaful. The second one, which is Health 360 rider with no limits. This offers unlimited coverage without annual or lifetime caps, operates on a co-takaful or deductible model. This is Shariah compliant because the participant will share a fixed percentage of each claim, maintaining the principle of shared responsibility, ta'awun. Lastly, like Anugerah Max, which is mental health coverage for conditions like severe autism and ADHD, which is included, which again covers the Hifzu Al-Aqlu. And this tabaru deduction increases with age. This is actually justified and disclosed, so it remains permissible. However, participants must understand that the savings component carries market risk. There is no guarantee of capital, which avoid riba, but it requires the risk tolerance. In conclusion, both plans are fully Shariah compliant. The choice depends on someone's needs. Thank you.
Saving Plan Takaful is a compliant financial protection and saving scheme that help individuals achieve long-term financial security while complying with Islamic principle. It combines elements of saving, investment, and mutual assistance in a single financial product. Unlike conventional insurance, Savings Plan Takaful avoid prohibited elements in such as riba, gharar, and maisir. The concept of takaful originates from the Arabic word kafala, which refers to mutual responsibility and guarantee among members of a community. Under the system, participants contribute money into a common fund that is used to assist members who experience financial loss or misfortune. At the same time, a portion of contribution is allocated for saving and investment purposes. The main objective of Saving Plan Takaful is to provide financial protection while encouraging disciplined saving and investment. Through this plan, participants can obtain protection against unexpected events such as death, permanent disability, and critical illness, while simultaneously building financial saving for future need. Saving Plan Takaful also aim to provide investment opportunity that comply with Shariah principle and promote cooperation among participants through the spirit of mutual assistance. In Malaysia, family takaful products have become increasingly important as they contribute to socio-economic development by encouraging long-term investment, saving behavior, and improving financial security among individual and family. Saving Plan Takaful operate based on several important Islamic principles. One of them is tabarur, which refer to donation. Participants willingly to donate part of their contribution into a takaful fund to help other participants facing difficulty or losses. This concept reflects the Islamic value of helping one another and promoting social solidarity. Another important principle is ta'awun or mutual assistance, where all participants share responsibility in providing financial aid to members in need. This concept distinguishes takaful from conventional insurance. Because the relationship in takaful based on cooperation rather than profit making alone. In addition, all takaful operation must apply with Shariah requirement. Investment made by takaful operator are restricted to halal industry and activity approved by the Shariah Advisory Council. Takaful operate commonly apply operational model such as mudarabah and wakalah. Under the mudarabah model, profit generated from investment are shared between the participant and the takaful operator according to a pre-arranged ratio. Meanwhile, under the wakalah model, the takaful operator act as an agent managing the takaful fund on behalf of participant and receive a management fee for its service. This operational structure ensures transparency and fairness in takaful management while maintaining compliance with Islamic law. Saving Plan Takaful also offers several important features that make it attractive to consumer. Participants make regular contribution through the coverage period, allowing saving and investment to accumulate over time. The plan provide financial protection coverage together with maturity benefit when the policy periods end. Many takaful products also include additional benefits such as medical coverage and critical illness rider. Since all investments are managed according to Shariah principle, Muslim consumer can participate without concern regarding religious compliance. The importance of saving plan takaful can clearly be seen in Malaysian financial industry. Malaysia is considered one of the leading countries in the development of takaful due to strong regularity, framework, or increasing public awareness regarding Islamic finance. The growth of takaful industry has provided Muslims with an alternative financial protection system that align with their regulation belief while supporting economic stability and financial inclusion. Study also show that family takaful product contribute positively to social and economic development by promoting saving culture and providing long-term financial security for families. In conclusion, saving plan takaful is an Islamic financial product that integrate protection, saving and investment based on the principle of mutual cooperation and Shariah compliance. Through concepts such as tabarul, tawa'un, mudarabah, and wakalah, takaful promote fairness, transparency, and shared responsibility among participants. The Malaysian takaful industry continue to grow rapidly and has become a model for many other countries in developing Islamic insurance system. Therefore, saving plan takaful play a significant role not only in providing financial protection but also in strengthening socio-economic development with society.
My name is Nur Syafiqah Ada, and now I will present the issues and the challenges that faced by the savings takaful plan industry in Malaysia. The first issue is the lack of awareness and limited knowledge among the public regarding savings takaful plan. Although the takaful industry has grown rapidly in Malaysia, but many people still do not fully understand the concept and the benefits of the takaful product. Based on the research that we do, many consumers have limited understandings of takaful products and services, which this affects the growth of the industry. Because of this lack of knowledge, some customers are unable to differentiate between the saving takaful plans and the conventional insurance. Now I will provide an example. Okay, for example, the customers may not understand the concept such as tabarruk, surplus sharing, surrender charges, and investment return. So this situation can cause the customer to become less interested to participating in the saving takaful plans. So that's why the takaful operator should increase the public awareness through the educational campaign so many people can contribute to the takaful. Not only that, many people think that takaful plan also only for Muslim people. That's why they don't want to participate to it. The second issue and challenges is mis-selling and unethical practices by some takaful agents. So, mis-selling happens when agents provide the misleading information and also they fail to explain the product clearly or recommend the unsuitable takaful plans to customers in order to achieve the sales targets. This is because some Takaful agents engage in unethical behavior due to pressure to they want to achieve sale targets, and also they have to compete within the industry. Okay, for example, some agents may exaggerate the benefits of saving Takaful plan or hide the important terms and the conditions from the customers. There were also cases where agents misrepresent the information in proposal form, which later caused the customer's claims to be rejected. This issue actually can reduce the customer trust and confidence in the Takaful industry. So, Takaful operators should strengthen the agent training and ethical standard so they can prevent the unethical practice among the Takaful operators. Next, we go to the last challenges, which is the inability to standardize and harmonize the Takaful operations and Shariah practices. Different Takaful operators apply different operational models such as wakalah, mudarabah, and hybrid models. So, based on our research and findings, the difference in Shariah interpretations among the Takaful operators have created inconsistencies in the Takaful products and operational procedures. So, as a result, customers may become confused because of each Takaful companies offers a different terms, benefits, contribution, and structure. So, this makes it difficult for the customers to compare between the savings Takaful plans between the different operators. In addition, inconsistent Shariah practices may reduce the public confidence in Takaful industry. Therefore, stronger standardizations and harmonizations among Takaful operators and regulatory authorities are important to ensure the clear and more consistent in the Takaful practices. Now, I will explain the comparison between the savings Takaful plans and conventional insurance. So, basically, both saving Takaful plan and conventional insurance provide a financial protections and a saving benefits. However, there are several important differences between them, especially in terms of concepts, risk management, and Shariah compliance. First, from the aspect of concepts, saving Takaful plans are based on mutual help and donations, or what we call tabaru. This means all participants contribute to a common fund to help each other when facing a financial difficulties. Meanwhile, conventional insurance is more focused on risk transfer and the profit making, where the insurance company takes over the risk from the policyholder. Besides that, saving Takaful plans must follow the Shariah principle, where Takaful investments need to avoid the prohibited elements such as riba, gharar, and maisir. In contrast, conventional insurance does not specifically follow the Shariah principle in its operations or investment. Next is the difference in risk management. In Takaful, the risk is shared among all the participants, but in conventional insurance, the risk is transferred directly to the insurance company. This is actually one of the main differences between the Takaful and the conventional insurance. Other than that, Takaful operators are monitored by a Shariah advisory board to ensure that all activities and investments are Shariah compliant. Whereas conventional insurance companies do not have this type of Shariah supervisions. They don't have the advisory board to supervise their conventional insurance. So, overall, we can see that savings Takaful plans are not only focused on financial protections, but also it emphasizes the ethical financial practices, transparency, and mutual cooperation according to the Islamic principles. I think that's all from me. Now, I'll pass to my next group member to explain more about the savings Takaful plan industry in Malaysia.
Next, for the recommendation part, several measures can be proposed to strengthen the development and effectiveness of savings plan Takaful in Malaysia. Among the recommendations are increasing public awareness and education, providing more affordable and flexible plans, enhancing digitalization in Takaful services, strengthening support from the government and regulatory bodies, and improving transparency and customer service. Firstly, public awareness and education regarding Takaful products should be improved. Many Malaysians, especially youth and people living in rural areas, still lack knowledge about the importance and functions of savings plan Takaful. Some people are also unable to differentiate between Takaful and conventional insurance. Therefore, Takaful companies, financial institutions, schools, and relevant authorities should organize awareness campaigns, financial literacy programs, seminars, and educational activities. Social media can also be used to spread awareness more effectively. Secondly, Takaful operators should provide more affordable and flexible savings plan Takaful products. Due to the rising cost of living, many individuals are reluctant to commit to long-term financial protection plans. Therefore, Takaful companies should introduce lower contribution rates, flexible payment method, and customized package suitable for different income groups. This approach can encourage more participation, especially among low and medium income earners. Thirdly, digitalization in the Takaful sector should be enhanced. Nowadays, consumers prefer fast and convenient online service. Therefore, Takaful providers should improve their digital platforms and mobile application to simplify registration, contribution payments, claims processes, and customer service. Digitalization can improve efficiency, customer satisfaction, and accessibility of Takaful service. Besides that, stronger cooperation between the government, Bank Negara Malaysia and Takaful companies is important for the sustainable growth of the Takaful industry. The government can provide incentives, subsidies or tax benefit to encourage participation in savings plan Takaful. At the same time, Bank Negara Malaysia and the Shariah Advisory Council should continue monitoring Takaful operations to ensure compliance with Shariah principles. Lastly, Takaful operators should improve transparency and customer service by providing clear information regarding contribution, investment, benefits and surplus distribution. This can increase public trust and confidence in Takaful products. In conclusion, savings plan Takaful can be further improved through public education, affordable products, digital innovation, government support, and better transparency. These improvements are important to strengthen financial protection, maintain Shariah compliance, and increase public confidence in the Takaful industry. Thank you.